Hey guys, a very good morning, Fabio here, and I hope you guys are all doing fantastic. So we saw some big moves yesterday within the market, and I'm not gonna lie, my hands were itching to trade. However, I did stay, of course, out of the market, and I will resume trading from tomorrow onwards. So let's dive into the market. Let's see what kind of moves the market generated yesterday, and let's see if we can get some interesting setups, most likely for the market of tomorrow. So the dollar index is still just consolidating within this overall range. As we can see, we came in towards the lower 25% of that range, then started to reverse based off demand inside of these wicks. So inside of these wicks, on the lower time frame, there was most likely a very clear area of demand, which caused the price to push back up in towards the highs. So let's just quickly dive in towards the 15, for instance, and see what was going on. We just simply set a line on price, dive down in towards the left, and what you'll then of course see is this area of imbalance within the market, from where the market just absolutely pushed back up in towards the highs. So clear downtrend gets broken by this area of imbalance within the market, breaks multiple areas of structure. So it's pretty logical that that is your area of demand within the market, and as you can see in the future, we reacted beautifully off it. So currently moving back up in towards the highs. 4 hour is still bullish as we kept this low over here, and we could start seeing some more upside. So currently just breaking this high over here. So we had some supply located over here, supply got broken, then we had some supply over here. Supply is currently getting filled. As you can see, in the past we already filled it once, so it is likely that we are going to be breaking this area of supply and see a push in towards this buy to sell pivot, or these two imbalance candles, and then most likely either see a sell-off, or then we will start pushing up higher, as this area of supply has also already been filled and this area of supply has also already been filled. So I'm really kind of looking for those fresh areas of supply and demand, and what I can currently see in the market is that a lot of these areas of supply have already been filled, except for this one over here. So let's wait until that one gets hit, and then from then onwards we can see, okay, are we going to get that reaction which tells me, okay, the market is going to start pushing back down again, or are we going to start breaking structure in a bullish manner? So let's head over to our first pair, which is Aussie dollar. And Aussie dollar, guys, so Aussie dollar yesterday broke our structure. As you guys can see, I was looking for some potential longs down below over here, as we did have a demand chain and a bullish order flow. However, if you paid attention, of course, I did mention that I didn't really like it due to the fact that we had this ascending corrective price action. And essentially what we saw was a dump in towards the lows after touching that EQ of the bearish range on the daily. And currently what we're waiting for is just a pullback in towards my area of supply before a further dump back down in towards the downside. The problem is though that if you look at this leg down and just focus on this price action that you're seeing over here, what we can see inside of that leg is that there is no structure inside of this leg at all. So I'm going to give you guys a tip. So when you don't see any structure within a leg down and you just see a straight push down, then it is likely that the first reaction in towards a supply or demand area is going to fill, and you will see another sweep of liquidity before the real dump commences. So this mainly just has to do with the fact that there's no liquidation possibility for the market, if you understand what I mean. If you, let's say, were to have structure and kind of like this mini downtrend on the 1 hour, you know that you're going to have those stop losses above the highs. However, currently we do not have that. So what does that mean? Well, it means either stop losses are going to be located above this high over here, or once we come in towards the market is going to kind of fake out those sellers, then push up one more time, take out those sells, and then really commence a dump. So that's kind of what I'm going to be anticipating on if we see a pullback in towards my 4 hour area of supply, just for you guys to know. So we're currently bearish, and I am just going to be waiting for those sells, as this is a high probability sell because it is the first sell after a breakout out of this ascending wedge. So sell is of course in towards this area down below over here of the 4 hour demand. However, of course, if we tap into towards this 4 hour demand first, then I will not be looking for those sells from this area of supply. So with that said, let's head over to our next pair, which is euro dollar. And euro dollar, guys. So euro dollar yesterday, as you guys know, I was looking for some potential longs from, and let me just mark it out for you guys, from this wick over here. However, as you can of course see, we saw no reaction whatsoever from that wick. Therefore, I was also not interested in any buys at that specific moment. So of course I'm going to always be doing some predictions of where I expect price to react. However, it is react and adapt. It's not like, okay, well, that we have an area of demand over here, it's definitely going to be a buy from there, if you understand what I mean. We wait for price action to come in towards that area of demand or supply, and then we adapt ourselves to that situation. So in this particular situation, the market was far too impulsive, and therefore it was not interesting for me. So what has currently happened? Well, we broke 4-hour structure over here, so we are bearish, and I am essentially expecting a sell-off in towards this 4-hour demand level, this lower one, which is still untouched. As we can see over here, orders have already been mitigated once, twice, and now I'm just expecting a further sell-off because I don't expect the market to really reverse from a area of demand which has already been filled before. Furthermore, you can see that we also already tapped in towards this area of demand as well, but that the reaction is pretty weak. So 2 areas of demand can't really push price upwards, only what is it, like 30 pips. So not very convincing, and therefore I do think that these 2 supplies are going to be failing, and we are going to see a push in towards this area of demand. So what I would really like is essentially just some kind of like reaction from here, a push back up, then a close below this swing low, flip bearish, see a pullback in towards this area of supply, and take those shorts from over there. That's kind of what I'm focusing on. So yeah, that is it from euro dollar. Let's head over to pound dollar. So pound dollar, guys, and pound dollar saw a beautiful dump yesterday back down in towards this area of demand, which I called. I was waiting for those longs from there. However, of course, no real setup occurred, as it was just purely a spike in towards that 4-hour area of demand, and it's not like I set a limit order there. I do wait for price to react from my zone and then give an entry. However, we didn't really see any entry possibility in this particular situation, and therefore no entry for pound dollar from me personally yet. So what am I expecting next? Well, we could still see a further push up. If we quickly dive in towards daily, I still personally would love for a push up higher in towards this 0.88 Fibonacci retracement level, as supply over there is very strong, or in towards this area of supply. However, of course, that has already been filled once, so preferably I would see this higher area of supply. However, a full reversal could already occur from over here. However, what I don't really like about that is the fact that of course it's less high in the leg, and also if you look at the daily and the weekly, so quickly dive in towards the weekly, this area on daily is stacked with a weekly imbalance, and over here we do not have a weekly imbalance. We already filled this weekly imbalance and closed above. Therefore, I wouldn't be surprised if we see a push up higher in towards that area of supply over there. So yeah, that's essentially what I'm going to be waiting for. However, 4-hour price action is a little bit ugly, as you can see over here, kind of just chopping in towards the highs. So not really trying to engage with pound dollar at this moment and time. So yeah, let's head over to Kiwi dollar. And Kiwi dollar, guys. So Kiwi dollar, just like Aussie dollar, broke structure over here, became bullish, and now we have our 4-hour area of supply. So for Kiwi dollar, we have kind of the same problem as on Aussie dollar. We just have this straight push down, right? So what you'll most likely see is at least a push up. However, we do have kind of like this high over here. We could see some liquidation, so I at least want to see spike above this high over here before looking for those shorts. Shorts could look very good if we see a retracement back up into there, at least back down in towards 0.67597. However, if we tap in towards this zone before tapping in towards this supply, then of course I will not be looking for those shorts anymore. So yeah, that is it from Kiwi dollar. Let's head over to our last pair, which is gold. And gold, guys, so what are we seeing on gold at the moment? So gold is currently reacting to this area of 4-hour demand very clearly, pretty much as I mentioned yesterday. So as you guys know, I also had an area of demand located over here. However, no reaction at all, therefore I just completely skipped it. This is now your area of supply essentially that took out this area of demand. So if we see a reaction, or if we see price push back up in towards that area of supply, we can expect a reaction. Currently on the lower time frame, it is very messy price action, so I'm not really seeing any long opportunities. However, if you do, you could look for some kind of 15-minute setup to take some longs back up higher. However, personally not really interested in it. If this area of demand holds, we are definitely going to be pushing up back in towards 1820 and after that 1840. However, as a matter of fact, I do know a lot of people are looking for longs on gold, so that is kind of stressing me out due to the fact that we have such a clear bullish order flow, right? However, if we just stay logical and like-minded, what we can clearly see is that we are respecting demand each time. So we had demand over here, then we had demand over here, gets taken out. Now we have demand over here, so we could definitely see that push up higher occur from here if we just view this particular situation very logically. If we break underneath 1789.50, then we will flip bearish and we will be able to look for short setups in towards 1772, which is a possible reversal area. So yeah guys, that is it for today. Thank you so much for tuning in. I wish you all a fantastic day, and if you have any questions, as always, feel free to reach out to me through Discord. Link is in the description down below. Thanks guys.